It's Jobs Week, and we were hoping to see a friendly BLS report this week, but it just wasn't so. Here's the headlines from the week that passed. We got two appreciation reports for the month of April, and they're still very strong. CoreLogic is up 1.1% month over month, 5.3% year over year, and ICE is saying it was up 0.9% month over month and 5.1% year over year. There's an amazing opportunity, financial opportunity in home ownership, and if you're still on the fence, you're thinking it might be better to rent, reach out to me today and I'll break it down in my rent versus buy calculator and show you what kind of financial opportunity there is in home ownership. We got the ADP jobs report, and that measures employment with actual data, with actual payroll records from the private sector. And there were 152,000 jobs created in the month of May, and that is below the 175,000 estimated. Job stayers' pay increased with 5%, that is unchanged month over month. Job switchers' pay increased with 7.8%, but it's down from 9.3% from the previous month. The European Central Bank cut their rate with 25 basis points. It is now at 3.75%, and this is the first cut since 2019. We're also seeing other countries cut their rates, such as Canada, Sweden, Hungary, and the Czech Republic. And we might not be there yet, but this might be a look at what's to come in the US. As mentioned, we got a not-so-friendly BLS report this week. 272,000 jobs created in the month of May. That is over the estimated 185. And they're using the faulty birth versus death model of businesses, where they look at how many businesses went online versus offline and how many jobs that accounted for. Within the BLS, we have two surveys. We have the business survey and we have the household survey. The household survey has a job creation component of their own, and they are showing a loss of 408,000 jobs. What a divergence from the headline. And labor force decreased with 280,000, and because there were more losses than a decrease in the labor force, unemployment went from 3.9% to 4%. And remember, the feds are looking to keep that under 4.1. If not, they're going to have to start making those cuts sooner. Purchase mortgage applications are down 4% week over week. They're down 16% year over year. Refis are down 7% week over week. They're up 5% year over year. Rates are just around 7% again, and a barrel of oil costs $72. Next week, we have the Fed meeting. We get some inflation data with the CPI and the PPI. Stay tuned. Have a great weekend, and I'll talk to you soon.